Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah. You're watching IndianOpen. Let's go straight to the headlines at this hour. Donald Trump's fired his second salvo, imposing higher tariff on Chinese products worth $200 billion. Asian markets trade with deep cuts as the simmering trade war makes investors wary. TCS posts its highest North America revenue growth in 3 years, helping the outsourcer beat estimates in the first quarter. Axis Bank says it's shortlisted 3 candidates who can take over from Shikha Sharma. And France secures its position in the FIFA World Cup final by beating Belgium 1-0. Well, it was an interesting match, but doesn't promise to be a very interesting market today. At least if you're on the long side, you're in for a rude shock this morning. Let's take a look at the trade setup. First, what happened in trade yesterday? Actually, over the last couple of days, we've been brushing aside the trade war concerns and pocketed strong gains for the Indian markets. Well, a third day in a row, we've had some fairly decent moves, much more so yesterday and day before. And if you just look at the positioning for the July series, the Nifty OI and the Nifty Bank OI, both of them are up. 4% for the Nifty, 10% for the Nifty Bank. And the last couple of days, there are some serious long positions on the index that the FIIs have added as well. So the positioning has certainly tilted towards the long side. And the market breadth has been positive as well. In yesterday's session, it was a high volume day, even though the flows were low. FIIs, DIIs didn't participate too much on the cash side, but the volumes were fairly high and the market breadth remained fairly steady. So the positioning until yesterday's close was fairly positive. But or in late USR timing yesterday, Donald Trump has released $200 billion list of the new China tariff targets, and that would make markets jittery. The US futures dipped immediately post this announcement, and if you just look at what the rest of the Asian pack is doing, this is what the US futures are doing, and the top 3 or 4 red ticks are what the Dow futures or the S&P futures are showing right now. More importantly, the Asian markets have taken cues from what the announcement and the US futures trade was looking like. So the Nikkei, Shanghai, Kospi, all of them starting off with fairly deep cuts. The SGX Nifty is not quite mirroring what Asia is doing. But, well, we've seen now that the SGX Nifty has failed to be an exact lead indicator of what the quantum of cuts or gains that the Indian markets will start off with. Somehow the last few days, it's not been an exact lead indicator. However, suffice to say that we'll start off marginally in the red. I wouldn't be surprised if we start off in the red. In fact, I'd be very surprised if we start off in the same vein that we've started in the last couple of days. But let's wait and watch. So do watch out. There could be a bit of red today, and it'll be interesting to see what happens to positioning, because the last couple of days or the last 3 days, as I said, we've tilted certainly towards the long side. It becomes important in such a scenario to look at what stocks could do. Needless to say, TCS would be the first one to watch out for. The numbers were above estimates, the digital business zoomed, and the North American revenue growth was the highest in the last 12 quarters. I read this detailing from Agam, and they seem to have done well on a lot of counts. He'll of course join in and talk about this in detail, but these are a couple of summary points which I thought were important. We were talking yesterday about how TCS would not react negatively if there was a slight miss because the buyback is anyways in play. Here TCS has actually done very well. So let's wait and watch what happens to the stock today. Won't be surprised if it starts off in the green, even if the market is starting off marginally lower. Slightly bad news for V-Mart and Ramki Infra. V-Mart in particular is a stock that is on a bit of a roll, but in the ASM from today, and that will not sit down too well for these stocks. IDBI Bank. Now, Bloomberg reports that officials are indicating that the LIC IDBI deal may trigger an open offer. It's speculative, so wouldn't want to dwell too much on it. But yesterday, the stock went up primarily on this speculation as well. This is something that the Bloomberg terminal is reporting. Let's wait and watch if there's some further uptick in IDBI. Keep in mind there was some short covering yesterday, and it's entered into the FNO ban as well. So trade could be slightly different. But wait and watch. IDBI Bank could be an interesting one to watch out for. Lastly, I thought this Credit Suisse note on Bharti Airtel was interesting. They've cut the price target to 400 from 440. They've maintained the neutral. But a couple of interesting points, maybe well known, but for the first time somebody's gone out and highlighted it unequivocally. They're saying that the competitive intensity is staying high with Jio continuing its aggressive strategy. Remember, the belief 6 months earlier was that while this has started off well, eventually all three will come at par and everybody will be gaining from it. Now, Jio is continuing its aggressive strategy. And they're mentioning that there are now not too many smaller players left to give away more market share to Jio. Now, is this implication, therefore, that it might now be the turn of the incumbents to give away their market share? Or would it mean that Jio has gotten the easy pickings done and now it has to start off the hard run? Remains to be seen, but they've certainly gone out and cut the price target on Bharti Airtel, which means that maybe brokerages now believe, or maybe experts now believe, that after the low-hanging fruit out of the way, Jio will do all it can to harm the customer base of the incumbents as well. Let's wait and watch. But they've cut the price target on Bharti Airtel, which is why I thought it was an interesting note. Somit, maybe during the course of the show, will put some more light on this. But these are 3 or 4 names that I thought were important ones to highlight at the start of the show. However, what's on First Word today? It's a collection of the top editorial stories that we believe we should bring to you first up on the show. Trump escalates trade tensions with China with plans to impose additional tariffs. Bloomberg's Tom McKenzie will tell us all about it. A rebound in North America and the banking vertical helped TCS spring a surprise. We analyze the numbers with Agam Vakil and Harit Shah of Reliance Securities. And do fundamentals of cement companies justify such low valuations? We take a look at what's ailing the sector and whether there has been a stark divergence in the performance of the top 2 battery makers in India. Yash will join in to tell us why. However, the first news, and something that came out late US time and early Asia time, if you will, the Trump administration has announced tariffs on additional $200 billion worth of Chinese products. The list of goods that may face 10% duty is over 200 pages long. Clothing, television components and refrigerators are amongst the products that may be hit. The tariffs could take effect after public consultations end on August 30th, according to a statement from the U.S. Trade Representative's office. Tom McKenzie of Bloomberg News reports on how China may retaliate.
In about mid-June, I think it was, they put out a statement saying we are going to respond with quantitative, tariffs, and qualitative measures. So potentially putting the full weight of China's bureaucracy at play to straitjacket US companies here. Now, we haven't seen an official outlining of measures around that, though we've heard state media responses and editorials talking about some of the potential measures, whether that's tax inspections or holding goods up at port, that could be put into place. But that would be after, very much likely after this $200 billion worth of additional tariffs the Trump administration puts into play. More broadly, we're seeing a strategy from China play out now about forming alliances with the European Union to push back on Washington, and also dangling a carrot to countries other than the US around market access and around imports, and China telling companies here to increase their imports from all countries other than the US, whether that's soybeans, seafood or the autos. The other side of the strategy for China is hoping that US corporates are going to put pressure on Washington, and we've seen that from some of the retailing associations in the US putting out comments already today pushing back against this action from the US. China is hoping that that pressure will play off between now and August the 30th, that they'll get a window of opportunity to get back to talks and negotiations, but they're certainly not looking to back down at this stage.
Well, that's Tom McKenzie highlighting how China might retaliate. Certainly the trades have been not retaliatory in nature, but down in nature. Almost all the Asian markets are starting off on a weak note. However, could that impact TCS? That's the big question. Remember, earnings season is off to a good start. IndusInd Bank in line, and then TCS reporting a strong set of numbers in the first quarter. The country's largest outsourcer beat estimates, especially on the back of strong growth in its largest market, that is the North American region. Agam Vakil is here to take us through the key takeaways from the numbers. Agam, I was listening to you last evening as well, and you seemed mighty impressed with the initial takeaways that we had. Now that you have had time to digest the numbers, what are the key takeaways from the TCS Q1?
Well, Neeraj, I'm sure that investors are going to be very happy with the TCS earnings this time, considering it's been a beat on all counts, especially on the top line, where we've seen about a 6.8% growth sequentially in rupee terms. And again, when it comes to constant currency growth at around 4%, I've been reading through and going through a lot of brokerage notes, and they're all of the opinion that it certainly has been a beat. The real surprise comes when it comes to margins. Margins at 25% ahead of the consensus expectations of 24.4%. This means that the company's operational efficiency has actually managed to counter that seasonal impact that comes through on account of the salary hikes. And the other factor of cross-currency movements, that really hasn't played out, because the management has said that while the rupee has certainly depreciated quite considerably to the US dollar against the other currencies has remained quite firm. Now, two aspects which stand out in this particular quarter. First one is the largest vertical, the banking and financial vertical, which contributes to well over 31% of its revenues. That has seen a 3.7% constant currency growth, and this is the highest growth that the company has seen in 12 quarters. This is something that stands out after 12 quarters of the company management saying that we are in wait and watch mode, we are figuring things out with the clients, and we're trying out new technologies. The company finally starting to see some movement, some improvement in this particular vertical. So that's a very important takeaway here. The other important takeaway, as indicated by Accenture's earnings as well, is the uptick in North America. Again, we're seeing a 3.7% constant currency growth in North America. It's the largest regional market, considering we get over, or TCS gets over 51% of its revenues from these markets. It's extremely crucial. Finally, coming down to its digital revenues, that's seen a 44% growth year on year, and it now contributes to as much as 25% of its overall revenue. So a lot of these factors have come together in favor of TCS, and that's the reason why we are seeing a beat on all fronts. But that's not all. The management, of course, has also spoken to the press about what it expects in the next few quarters to come. This is what they're saying. Listen in.
Digital growing at a significant good pace, and the larger deals, many of the larger deals, and we are delivering to plan. So I think we only see the opportunities. We don't see anything significant to call out. The rupee depreciated against the dollar, but was stable against the other currencies. But the cross-currency effect between these currencies and the dollar was quite pronounced. So from that perspective, while the dollar depreciation was almost 5%, what it translated into the final currency impact is around 2.7% or so. Second is hedging. We continue with our hedging program. We generally do it on a short to medium term, which is for rolling couple of quarters. We continue to be hedged on all the currencies which we have, and the major currencies. So we don't change our program depending on where the currencies are moving. We stick to a disciplined program on that perspective. We had a constant currency growth of 4.1%. Now on the margins, if you look at the last quarter when we ended, we had a 25.4%. And this quarter we had, due to currency, we got about 70 basis points. So that should take us to 26.1. We also had about the salary increases, etc., which is about 180 basis points, which is the impact of the margins. So if you take from 26.1, if nothing else had changed, and if we factor in the increases for the salaries, we should have been at 26.1 minus 1.8, but whereas we closed at 25 because we were able to get back through operational efficiencies almost about 70 basis points.
The BFSI demand is coming across the board. So whether it be customer front-end facing applications, trying to reimagine the customer experience, a lot of activity happening on that. Combined with areas like wealth management, which is a big focus for customers. Wealth management is a classic one, which requires integration of all their offerings at the back end, but a very strong front-end customer experience part of it. Similarly, they're seeing the regulatory element of it continues to attract a lot of attention, and the use of automation to both drive efficiency as well as to lead to easier regulatory compliance is another big thrust area. We are seeing banks expand regionally. We've seen Canadian banks come into North America and other banks trying to expand regionally. We see banks expand horizontally. One of our Nordic banks has very successfully spun off peer-to-peer payment platform which we built, and we are now helping them take it to other customers. So banking is coming back in a very, very diverse set of opportunities.
BFSI really grew by about 3.7%. And then if you include the contribution from some of the large deals which are platform in nature, the BFSI actually grew by 5.6%, right? And as we speak, the pipeline of large deals is solid. We continue to stay focused in stitching together some of our digital offerings and enhance the largeness of the deal per se.
Well, that's all the management commentary or the important commentary that you really need to hear from TCS. Let's just get a quick perspective from Harit Shah. He's Senior IT Analyst at Reliance Securities. Joins us right now on the phone line. Harit, now that you've had time to digest instead of just reacting at the spur of the moment, what was your one or two key takeaways from TCS, and what's the outlook on the stock now?
Yeah, so I think clearly the probably one of the most positive aspects of the performance was the improved.
I think we've got a bad line with Harit Shah. He was talking about the improved performance in the North American region, and arguably, I believe, the digital business which has performed really well. I think that is what Harit was probably trying to mention as well. Maybe just try and repatch that line very, very quickly if we can. Okay, I think we do have him. Harit, okay, we'll just get him in moments from now. But the moot question to him would be that after this performance, keeping in view that the buyback is also on, does TCS remain at the top of the pecking order when it comes to large cap IT, or are there some other stocks? I would be really surprised if TCS doesn't feature in the top two after the kind of quarterly performance that has come in. But Harit, that's the question really. Those one or two key takeaways, and after this performance, is it difficult to omit TCS from being at the top two of the pecking order?
Yeah, so like I was saying, I think one of the most positive aspects of the performance was the renewed improved visibility in BFSI and retail. These are a couple of verticals that were giving some headwinds in the last few quarters. So I think the overall improvement in outlook for these two verticals is the biggest positive takeaway. I think that is going to be a major factor that will help them to achieve double-digit revenue growth for FY19. And of course, details in terms of total contract value. I think that is a data point they were not giving earlier. So it gives us some understanding of the kind of revenue visibility and order book for the next in the near term. So I think these are two very good factors. And of course the margins, no doubt about that. I think they've obviously allowed the rupee depreciation to reflect on the margin side. So I think they could come back to their aspirational margin target maybe in a year or 1.5 years from now. And as far as the stock is concerned, of course, I think it was pretty difficult to omit it right over the last 1 year. I think the stock is up by more than 50% in the last 1 year. After not doing too much for the previous 3 years. So, there's no doubt that going forward, especially with the improved outlook and, the share buyback, cash return to shareholders, that will ensure that the stock continues to trade at a higher valuation versus all its other peers.
Interesting. So keeping in mind the current valuations, Harit, and post the TCS numbers, I know you'll be awaiting the buyback price from HCL Tech or the kind of performance that Infosys dishes out. But with the information that you have at hand, what would be the pecking order in large cap IT?
Yes, I think I would go TCS, Infosys, and HCL Tech in that order. Okay.
Just one last question, Harit. HCL Tech, what's the buyback price that you are working with? I think the announcement comes in tomorrow.
No, so I mean, we are hoping for at least 1,050 or somewhere between that and 1,100. I mean, it's all speculation. It obviously depends on factors out of our control. So I wouldn't like to speculate too much on what is going to be the buyback price, but naturally, it should be attractive enough to evince interest, like we saw was the case with TCS. So I think if that is the case, then definitely it will be a positive factor for the company.
Great, Harit. Many thanks for joining in this early in the morning and giving us your thoughts. Appreciate your time.
Thank you.
That's the view from Harit Shah of Reliance Securities. Okay, now the next piece on First Word is on cement. They've had a tough time this year as pricing power seems to have remained elusive and demand somewhat patchy. But are the fundamentals and the valuations as bad to support such valuations, or will we see some bit of an uptick? Are the cement companies pricing in the worst? That's the question that I'm trying to ask here. Now, let's look at 2 or 3 pockets out here. Firstly, Ambuja. It's trading at approximately $110 on an EV per ton basis. And the replacement cost, I was just speaking to Nikki over the last couple of days, and she was saying that the replacement cost for cement currently is to the tune of $100 to $105 per ton. So Ambuja is trading just in or around that replacement cost. For one of the largest players in the industry to be trading at replacement cost is not something that we see too often. Now compare this to what the EV per ton numbers for some of the other players are. I think the range is between 150, 160 to about $210, $220 on an EV per ton basis for all of these, be it Ultratech, be it Shree Cement, be it Dalmia Cement. So is there a reason why Ambuja, arguably one of the largest players and erstwhile one of the most efficient players, trade at such a deep discount? I think that's the question that a lot of fund managers are asking, and a couple that I spoke to have invested in the company as well. What are the fear factors? Maybe for Ambuja, maybe for the space at large. I think everybody's bothered by just 1 or 2 or 3 key factors. One is there's a lack of visibility on pricing upside. There might be a few pricing upticks here and there, but there's no visibility, clear visibility over the next 12 months on to what pricing could look like. There are concerns around earning downgrades coming in. 1, because of the lack of pricing power. 2, because of the no clarity on what the quantum of capacity utilization will be for different cement players, and whether or not the multiples could actually get derated themselves. That's the other big question. Not that cement companies are trading at terribly high EV EBITDA levels, but if the multiples derate even further, then it's a problem. Actually, speaking of multiples and valuations, look at what the EV EBITDA numbers of some of the major cement players look like. So we've just pulled out what the largest players are trading at. So this is Shree Cement, and there the estimated EV EBITDA is not looking all that bad. But turn around to an Ambuja, turn around to some of the others, Ultratech too would look okay. It's probably arguably one of the most expensive and most well-regarded large cement players. But then take a look at what ACC and what Ambuja EV EBITDA numbers are looking like, and you will see a clear downtick over the last 12 odd months at least. This is Ambuja, and look at what happened in March, June, September, the EV EBITDA numbers that stayed for Ambuja, and how they've come off over the last 4 quarters. And this is the point that select people are taking. Nobody's anyways taking sectoral calls. People are taking bottom-up calls. And in such a scenario, companies like Ambuja stand out because of being very attractively valued, both on the EV per ton basis as well as on the EV EBITDA basis. Let's wait and watch if it finds some buying or no. Just one last thing, what's expected from Q1. We've just seen 2 large Nifty companies come out with numbers. We don't have too much of cement representation on the Nifty, save for Ultratech. But what's expected any which ways from that entire pack? One, I think across the brokerage notes that I saw yesterday, there's decent volume growth expected, except for companies like Sanghi and JK Lakshmi Cement, because they have company-specific issues. But otherwise, volume growth is expected to be okay. However, there's going to be a steep rise that these companies would have faced in energy, freight, raw material costs. Essentially, input costs would have seen a steep rise, and that may impact the EBITDA performance and consequently the PAT performance of almost the cement companies. So the results may be mixed. But if at all there is buying or emergence in the cement pack, it will not be because of what the financial performance is, but maybe, just maybe, because of the valuations that select cement names are trading at. We'll get to know when we get to know. Anyways, that's probably the similar trend that's happened in battery makers. It's not as wide a pack as cement is, but Exide and Amara Raja, the top 2 makers in India, have had divergent fortunes. While Exide has had a steady ride over the past few quarters, Amara Raja has had a tough time trying to keep up with its peer. Yash Upadhyay has done some research which might explain why the divergence in these 2 companies over the last, 3 years, Yash? Good morning.
Yeah. Right. Good morning, Neeraj. So the answer to this lies in the numbers. So if you take a look at the net profit performance of both the companies over here, you could see that Exide has managed to grow its net profit by almost 2% on a compounded annual growth rate over the last 3 years. You can see they did a net profit of about 620 crores in FY16, and that number now stands as of the latest full year FY18 to just a little under 700 crores. Now, as compared to Amara Raja Batteries, their net profit has gone down from about 480 crores in FY16 to about 470 crores for the full year ended FY18. So there's a bit of a dip in profitability when it comes to Amara Raja. Similarly, Similarly, in terms of margins also, Exide has managed to keep stable margins despite the fluctuating lead prices. As you can see, on an average over the last 12 quarters, they have done margins of about 14 to 14.5%. Compare that with something like an Amara Raja, and you could see that their margins, they have gone from the highs of almost 17.5, 18% in FY16 to as low as 13% recently. And the management, they don't seem to see those levels coming back anytime soon, as they have guided for a mid 14 to 16% kind of a margins for FY19. Now let's dig deeper into the numbers and understand what is it that's hurting Amara Raja Batteries and what has Exide done right over the same period. As you can see, Amara Raja gets almost a fifth of its revenues from the telecom business, and that has been a big underperformer for them. So the main reason for their fall in the net profit, that is the weakness in their telecom business, which has seen challenging times over the last 12 to 18 months. And as you can see, because of that, their net profit has fallen. Also, there has been an increasing pricing pressure, which has hurt their margins, and also an increase in competition from the lithium-ion battery. So there's been a technological shift which the company has not managed to catch up. When it comes to Exide, however, firstly, they've taken their interactions with their channel partners very seriously and have improved their service infrastructure. And also, they've introduced brands such as Ditex, which have targeted the value segment. Secondly, they've reduced their gap in terms of pricing with Amara Raja, and that has helped them to gain some of the market share. And when it comes to cost saving, that has helped them that has helped their margins remain stable. So basically, the company has two captive lead smelters. They contribute about 40% of their total lead requirement, reducing their dependency on the expensive imports. And as a result of this, their margins, they have been stable, and they are also planning to add a third unit in Haldia very soon.
Interesting, Yash. So there is a reason for the clear divergence. We are not trying to say that Exide has really outperformed Amara Raja in a big way, right, but there is a clear divergence between the two.
Right.
And therefore the question is, after this outperformance vis-a-vis Amara Raja, what does the valuation stack look like between the two?
Right. So if you take a look at the price to earning multiple, you can see that Exide is trading at a trailing 12-month price to earning multiple of 33 times, which is significantly higher than its 5-year average PE, whereas Exide is trading at a discount of about at 28% versus its 5-year average PE of nearly 30 times. When it comes to the brokerage view, well, they have a overall bullish view on the sector as a whole. So basically, they are expecting that the pickup in auto sales is likely to help volumes in the auto replacement segment. The newer opportunities in the form of electric vehicles, application in solar and motive power, and also one of the reports from Motilal Oswal, they estimate that the lithium-ion market is worth about $43 billion by 2030, and also the implementation of GST, that is likely to help these organized players like Amara Raja and Exide to gain some of the market share. But when it comes to their top pick, that continues to remain Exide, with almost 71% of the analysts tracking the stock on Bloomberg having a buy rating on it, while 16 out of 24 analysts tracking Amara Raja have a buy rating on it as well.
Interesting. More buy percentage for Exide. However, the return potential for Amara Raja, based on the consensus target price, seems to be higher. Yeah. Yashopadhyay, thanks for putting that into perspective. Well, there you have it. Electric cars notwithstanding, people continue to remain bullish on both the battery makers. Maybe slightly more bullish on Exide, not just right now, but over the past couple of years as well. That's all that we have on First Word today. A quick programming note. Anand Agarwal of Sterlite Technologies will join us at 9:30 today to talk about the Italian acquisition, but more importantly, the data boom and the consequent demand for fiber networks. So do stay tuned for that. But after this break, we take a full tilt towards the day's trade. Come back in just moments from now.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. the SME growth platform from India's largest stock exchange.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time. Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point of time. The weakness because of the trade wars has clearly been seen. The Nikkei is down 1.3%, the Shanghai is down 1.3%, and so is the Hong Kong market. The SGX Nifty, which was trading with a positive bias, has moved into the negative, has recovered from the lows of the day. At one point of time was down 60 points, but has managed to recover. But still almost an hour to go for the markets to open, so we'll see what happens with the Nifty at this point of time. But a lot of interesting trends coming in from the derivative space. Agam is standing by. Agam, yesterday another 90-point uptick on the Nifty. Seems that put writers are becoming extremely aggressive in the market. The range seems to be shifting much higher, isn't it?
That is true, Darshan. We've seen a lot of writing, but let's take a look at how we've started the futures. And for now, we're seeing longs building up as the increase in open interest of as much as nearly 4%. When it comes to the Nifty banking futures as well, where we did see an advance of around 0.5% and near 10% added in open interest. So longs there as well. Can we see a little bit of profit taking today? Let's wait and watch. But when it comes to the open interest change, well, two options that stood out, as Darshan was just mentioning right now, more writing in the 10,800 and the 10,900 puts, and unwinding in the same strikes as well. So these are the two levels that I'm going to be keeping an eye on as we move into trade today. Now, when it comes to the Nifty put call ratio, that has also hedged up higher, as one might expect, at around 1.65 from around 1.52. We did see IDBI Bank right now. That's moved into the F&O ban, so we'll be watching out for that one. And among several other stocks, perhaps the most important one in today's day of trade will be TCS. Do remember, a lot of traders will have taken positions in TCS, considering we've had the earnings come through, we've had good earnings come through, and on the back of that, this particular number could reverse and we could see some gains come through. So let's wait and watch. You did see some longs unwind there. And moving in, IndusInd Bank, of course, good numbers coming in, though marketers, and we did see a decline of as much as 1%, so perhaps some profit taking coming along there as well. Among other stocks, we are watching out for Exide. We saw fresh longs, and beyond Exide, we also had a lot of activity in Havells India, which also saw fresh longs. So on the whole, a lot of stocks out there to keep an eye on with a positive, bias in, at least at this point in time. We're going to have to see whether or not we actually do see that strength come through in a lot of these stocks going to today's day of trade.
Okay, Agam, many thanks. We'll certainly watch out for it. It'll be interesting to see how the F&O trend pans out in trade today. But Vinit Bolinjkar, Head of Equity Research at Ventura Securities, joins us on the show. Good morning, Vinit. Firstly, let's start with the two big earnings that came out yesterday. A quick word on what you thought of TCS numbers and what you thought of IndusInd numbers.
So to start off with TCS numbers, they were a total blowout. It was a fantastic result. And what is important is that they have resumed their growth trajectory in digital, which people were expecting to slow down. That has really caught up. And 9% QOQ, 25% YO, 44% YOY is an excellent kind of growth rate. Apart from that, we are expecting margins to come back to 26%. They are at 25% currently. And what is important is that the US markets have come back on the growth path. TCVs of contracts are also increasing. So at 82 to 85 rupees FY19 and 92 to 95 rupees FY20, I think the stock is going at decent valuations, and I think definitely there will be some short covering today, and also there would be renewed buying interest in the stock.
Interesting. Vinit,
apart from that, if you look at IndusInd results.
Yeah, please carry on. Please carry on. Please make your point.
So the IndusInd results were also in line with our estimates. We continue to believe that it's a secular growth story, and on all parameters it was a thumbs up. NPAs were under control, growth was ahead of 29%, and though the NIM came down by about 10 bips, that was expected because of the hardening of the interest rates. But apart from that, it was an excellent number, and we continue to rate a buy on the stock.
Interesting. Vinit, so the same question that I asked one IT analyst who came in early in the morning. Post TCS numbers, with the information that you have at hand, and I know you'll be waiting for the HCL Tech buyback price or the Infosys numbers as well, but what would be the pecking order at Ventura for large cap IT currently?
So it is HCL Tech, TCS and Infosys in that order.
HCL Tech, TCS and Infosys in that order. Okay, fairly interesting. Vinit, the other stock in news, the last few hours of trade yesterday, and arguably over the course of today's session, would be IDBI Bank. Now, various news during the rounds or various rumors floating around. You don't quite know whether there will be an open offer or no, but I think the market in yesterday's session was in the mood of pricing in a possibility of an open offer coming in as well. Do you guys track IDBI Bank at all, if not from an investment perspective, then from a technical trade perspective?
No, we don't track that. I believe that there is so much growth available in the private sector banks, notwithstanding the valuations, that to focus on our energies on stocks where we don't expect much to happen over the next couple of years is unwarranted. So we continue to be bullish on private sector banks. We think that they will cannibalize share from the PSU banks, and they will more than make up for the growth and the valuations.
So let's stick with banks, Vinit. Yesterday also the news came out in Axis Bank that 3 people have been shortlisted to succeed Shikha Sharma. Obviously that doesn't move the needle much, for probably a sentimental impact could very well come in. But overall, do you think Axis Bank has got its act right over the past few quarters? Because quarter on quarter they keep on disappointing as far as the asset quality is concerned.
So I expect with the appointment of a new head in succession, I believe that whatever needs to be done would be addressed immediately. So to that extent, it would be a bullish note. And what I would be looking for is complete drawdown and commentary from the management that all the negatives have been priced in, and that there would be no more negative surprises going ahead. So this will be my watch list on that stock. As far as retail growth is concerned, Axis has been performing well. It's got a well-balanced portfolio of corporate and retail lending. So it's one of the good banks which is primed for a recovery of private capex in the country, which should happen about a year from now. And keeping these in mind, while I would not advocate a buy on Axis Bank, it would definitely be on the watch list, as I said, with the trigger being that all the things would be taken care of and not brushed under the carpet, and the new management would like to start off on a fresh note.
Okay, hold on, Vinit. Our research team is ready with us. Lots of stocks that we need to watch out for. Not too many earnings coming in yesterday. We just at the start of the earnings season. But an interesting note by Deutsche Bank on Asian Paints, what they feel about the company and the paint sector. Secondly, you also have key highlights from what happened at the IndusInd conference call. A lot of interesting things were said about, the integration of Bharat Financial, the IL&FS Securities business. So that'll be interesting to watch. So we'll ask a research team, what they have for us. So, Nikki, start with you. What are the important stocks that we need to watch out today?
Sure, Darshan. We're going to start off with Punjab National Bank. This, along with Carlyle Group, is going to be looking to sell minimum 51% stake in Punjab Housing Finance to potential buyers. Now, PNB's 32.9% stake in the housing finance company at the current market price is valued around 6,545 odd crore. Also, we're going to be keeping an eye out on IDBI Bank, where the officials have indicated that RIC IDBI deal may trigger an open offer. So all eyes on that. KC International is another stock which has made it to our list today. It has secured multiple orders worth around 1,357 odd crore. We are also tracking in Coal India, which is going to be meeting investors and holding roadshows for divestment of its shares from July 11th to 20th onwards. Also, we are looking into a metal pack where Vedanta is going to be teaming up with Anglo American to bid for Indian coal mines. This is an ET exclusive, along with the Bharti Airtel, which has planned to raise in $1 billion in overseas loan to refinance its high interest debt on the balance sheet right now. MCX NSE again is in talks. This is an ET exclusive, which is going to be where both of these players are teaming up for bigger exchange play. And last in our list, we have Bagaria Industries, where the promoter has bought in 2.4% stake in the counter.
Okay, so we'll watch out for those counters. Saloni, what did IndusInd Bank have to say to analysts?
So IndusInd Bank reported inline set of numbers yesterday, and their earning growth trajectory remains on track. Now, in terms of M&A activity, management believes that the Bharat Financial merger will take additional 3 months to complete entirely, while ILNFS Securities and Services business acquisition should be closed in the second quarter of financial year 2019. Now, this should scale up their capital market business, given ILNFS alone contributes nearly 30% of share in the clearing segment. In terms of customer acquisition, IndusInd acquired nearly 1 million new customers in the last quarter, making the total customer base of 12 million, while they have also opened 10 new branches in the quarter went by, and they target to open another 200 branches in the current fiscal year. And in terms of fundamentals, they believe that decline in slippages ratio to 1.2% from 2% sequentially will improve credit cost for vehicle financing space, while overall outlook for commercial vehicle space looks positive. On the contrary, current account growth will continue to remain muted in the medium term. That's what the management is saying, Darshan.
Okay, and an interesting note by Deutsche Bank on the paint sector. What are they saying on Asian Paints?
Right, so basically Asian Paints is their top pick in the consumer discretionary space, and they reiterate their buy rating on the stock and have raised the target price to 1,600 rupees from 1,500. Now, their renewed optimism on the sector comes on the back of the increase in demand following the recovery in the economy. We've seen most of the paint companies report a double-digit volume growth in the fourth quarter earnings as well. So there is a visible pent-up demand. Also, the initiatives taken by the government towards housing for all, that is likely to drive volumes further, and the measures taken by the company should drive premiumization. That should also work in their favor. When it comes to the rumors regarding GST being cut on paint companies from the existing 28% to 18%, they believe that it would not have a significant impact in sales, as it would not push the volumes going forward, but it would improve their profitability. But all in all, they continue to remain bullish on this sector.
Okay, thanks so much for telling us which are the stocks we need to watch out for. Vinit, paints as a sector has done extremely well. Berger Paints, Asian Paints at record highs. What seems to be working for the paint companies, and what are your own estimates or views on the frontline paint stocks?
So I think the paint segment as a basket itself is a extremely optimistic space to be in. We have the Yojana, the Awas Yojana program of the Prime Minister playing out. That is got ambitious targets. Growth in the retail segment and real estate is also picking up slowly but surely. And we have to understand that if people do not buy a house, they definitely do repaint, redecorate their houses. So that is one expense which does not go away, and hence it is a consumable item. And if the GST is cut, that would be another trigger for expanding the growth rate. Although Asian Paint does not believe, I still think that you get a kind of a go into value added items, and that should drive the margins and hence profitability. And to my mind, Kansai Paints is a good stock to look at as of now, given that Asian Paints and Berger Paints are hitting new highs.
You essentially making an argument for Kansai because of the relative valuations that it is trading at, Vinit?
Yes, okay. Yes, for the relative value.
But would you, so people who already have an Asian or a Berger in their portfolio, what should they be doing?
Actually, if you see over the last 15 to 20 years, they have continued to grow. That is one segment that continues to grow. So growth is not a concern here, and hence investors should remain invested in these stocks.
Okay, we need to stay on. Some more ideas from you as well. A couple of stocks which have been consistently hitting new highs. We'll talk about those as well. And maybe the top idea from Ventura Securities today. But it's 8:45, that time of the show wherein we make a tilt towards the derivatives and the technical positions. Let's welcome in Chandan Taparia. He's Associate Vice President at Motilal Oswal Securities, joins us on the show. In a bit, Meghana Malkan would be joining us as well. But Chandan, good morning to you. Thanks so much for joining in. The last couple of days, Chandan, at least from the data that, the way we saw the data, FIs seem to be turning positive on the index futures. How have you viewed the data, and how would that stand the test of today's session, wherein we are likely to see some bit of a negative start at open?
Yes, very good morning. We have seen some buying interest emerging from the FIs front, and some short covering was also seen. And especially what we observed that put writing with call buying was also witnessed from FI's point of view, if you look at their positions. And now talking about the market move, the Nifty is continuously making higher highs, higher lows from last 5 to 6 trading session. It has surpassed its immediate falling supply trend line by connecting all the swing highs from 11,171, 10,929, 10,835, 10,816. So it has surpassed that falling supply trend line. That's why we have seen the movement of more than 120, 150 points from its consolidation band. So bias could remain positive. However, some decline could be seen, but again, that would be bought as per the volatility index. What we observed as per the option database, even after the market momentum, the maximum call open interest is intact at 11,000 strike. So somehow the 11,000 is likely to act as an immediate hurdle, while on the downside, the fresh put writing is seen at 10,800, 10,900. So because of that, 10,888, 75 is likely to act as a support. So as of now, recommendation per se on decline will continue to be with buy side by putting support near to 10,875, and will play a move towards 11,000 kind of level. Looking at the volatility index, that is near to 12.5 level, we have seen a decline in volatility in last 5 trading sessions. Until VIX remains below 13.5, overall bias for the market could remain positive, and buying could emerge on a decline. So we'll continue with the same positive scenario in the market, but we'll go with buy on decline strategy as of now with support of 10,875.
Okay, Chandan, and stock specific, which are the stocks that you're recommending for today?
Yes, looking at the stock wise, first trade is buy on Exide Industry. We have seen a consolidation breakout, and also it has given a breakout from its pole and flag pattern on the daily and the weekly scale. It has seen surge in the open interest and the volume activity, which also indicates that longs are even aiding at the current scenario. So buying interest could continue in the counter towards 380 zone. One can buying interest could continue towards 285 zone. One can buy with a stop loss of 266. Second trade is buy on GAIL. We have seen short covering led by built up of long position in most of the gas companies. GAIL has given a consolidation breakout. It managed to surpass its multiple hurdle of 350, 355 zone. We also seen the spurt in the trading volume and the open interest activity. This also indicates that momentum could extend towards 380. So buy recommendation on GAIL as well with a stop loss of 355 for an up move towards 380 level. One more trade on the buy side, that is the heavyweight HDFC Limited. This stock has given a breakout from a symmetrical triangle pattern on daily scale, and this consolidation breakout indicates positive momentum could extend. We have also seen the put writing activity at the lowest strike, and the stock has managed to respect its 50-day exponential moving average. So we'll suggest to buy on a small dip near to 1932, keep a stop loss of 901, and this stock can even move towards 1995 to 2000 kind of zone on the higher side.
Interesting, and a tilt towards large cap names from Chandan Taparia in the session today. Let's welcome in Meghana Malkan as well. She joins in right now, needs no introduction really. Meghana, good morning, and thanks so much for joining in. How are you approaching trade today, Meghana? We've had 2 or 3 strong days, but there's a likelihood of a soft start today, though I must say that the Dow futures have recovered some bit of lost ground. But how are you approaching trade this morning on the indices?
Well, good morning, Jesh. What I would like to say, what I see on the chart currently, though we've had a good impetus in the last, in this week has begun on a good note. We've seen sectors performing well, indices have been doing good. But I would be a little cautious at this level. If I had to really initiate a buy position, I would not do it right now. I would wait for it to close at a positive level on the weekly basis. But my existing positions which are long, I would really like to hold them for this week closing. So this is how I would like to take a cautious approach this week.
Okay. Meghana, what about stock-specific views? What's on your list today?
Well, first I have Jindal Steel. I believe I like the sector overall. I think from that, Jindal Steel has been really doing good. So that is one stock that I would like to buy for today, Jindal Steel. The second one that I would like to buy is India Cement. Like how I recommended last time, the stock is still doing well. And I think for those who are already long into the stock and continue going long, momentum is building onto the higher time frames, the weekly and the monthly charts. And the volumes have been good too. So these two stocks are placing a bet on this week.
Okay, interesting. Thanks. Stay on, Chandan as well as Meghana. Lots more to chat, but it's 8:50, so time for a special segment, Bloomberg Edge, wherein Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's the stock on your radar today?
Morning, Neeraj. It's Aurobindo Pharma, and the terminal is indicating further downside to add to the 10% cut that we have seen so far this year, based on the bearish engulfing pattern that has been formed yesterday. Remember that the market was relatively better yesterday, but in a good market also the stock managed to decline about 1%, indicating further weakness as well. Let's first have a look at the bearish engulfing conditions that you have to keep in mind. It's a single candle pattern that you have to watch out for, wherein you have to look for a bearish candle followed by a bullish candle. So, that's how it looks like. And the second candle should completely engulf the first or the preceding candle. So, essentially look for a red candle and a green candle on a consecutive basis. Now, longer the body of the second candle, the greater the chances, or the better the indication it is. And once you have all of these conditions, you have to look no further. That's called as a bearish engulfing, and that's exactly what has happened over here. Now, you can see that this is the last 1 year chart, and on multiple occasions, this particular pattern has been formed on Aurobindo, and it has worked relatively well. So, the last two candles, what you see over here is there is a red candle, which is just before that there is a green one as well, and you see that the red candle is completely engulfing the previous green candle, and the EL word written over on top suggests that this is an engulfing. And you can see in the past as well that this pattern has in fact formed and worked relatively well for Aurobindo Pharma.
Okay, Jayesh, just a quick follow-up. If you do a back testing of this method, what's the return that has been generated recently?
So, Darshan, last 1 year, if all of these patterns, whenever it was generated, the net profit on the downside would have been close to 2.5% on each of the trades.
Okay, so 2.5% bearish call that's coming in on Aurobindo Pharma, and that's what the Bloomberg terminal has thrown up. Thanks so much, Jayesh. Meghana, the Bloomberg terminal does indicate that the charts of Aurobindo Pharma look rather weak. What are your charts indicating?
Well, I have to see the higher time frame chart. Yes, it's gone completely into a sideways mode. You see the RSI also is oscillating between 40 and 60. I can see some kind of breakout happening on the daily chart. You have to see if it has to move above its previous high of 640. I would say it will gather some traction there, and one could initiate a buyout. But this is because RSI is really moving around just at the bullish level. It's consolidating just at the bullish level. So I'd not be surprised if the stock breaks out above that zone and gives us a breakout on the higher side. So I'd rather wait for it to move above 640.
Okay, so wait and watch move that's coming in from Meghana. Vinit, I'll come to you. Yesterday, the important news that came in was that PNB looks to exit a sizable chunk in PNB Housing Finance. Remember, this was reported in one of the papers earlier, and that time PNB Housing did manage to move up 15%. But what does this move? Now the company itself is saying that they want to divest stake. How should one play PNB as well as PNB Housing Finance in this scenario?
So I think the the monies that PNB would receive would not be that significant compared to its losses that are there. But I think PNB Housing itself is a very, very good stock to play. Growth is existent, and the stock should do well going ahead. I think, I don't remember the numbers offhand, but we were just doing some work internally and we thought PNB Housing was the most attractive stock in the segment.
Okay, that's interesting. So do watch out for these names as well. That does as far as banking. I think the stock which has really given support to the market the last 2 or 3 sessions arguably is Reliance Industries. Doing extremely well in trade the last 2 or 3 sessions. The build-up seems to be working strong. I know the 1-month chart might just show 4% uptick, but if you just look at what it has done in the month of July, there has been a significant build-up. Over the last 7 days, that's about 7%, and that's not for a tiny toon stock. It's for the second largest company by market cap in the country. So there is some bit of build-up that we're seeing in Reliance Industries for sure. We need a lot of conversations about how, if you have on a 3, 4, 5-year perspective, then Reliance promises returns which would be outsized in nature. What are you at Ventura Securities pricing in for somebody who doesn't mind buying a Reliance right now and forgetting it for the next couple of years?
So we don't track Reliance at Ventura, but if we were to just go by Mukesh Ambani's commentary where he is speaking about retail being the new growth driver, and telecom, the way they are going out and squashing competition, I think they are getting into a very dominant position from which, once the market share gains have stabilized, they will raise rates and the profitability will start ensuing from there. So if you consider all these facets, the refining is doing very well, and the 2 segments which are a drag on their bottom line currently, where they're in investment space, which is retail and telecom, if they were to start moving past the break even, I think this stock can have some fireworks going out over the next 3 to 5 years. So I think it's a very promising stock to be invested in.
Okay, so we'll watch out for Reliance Industries, but an interesting analysis. HDFC Mutual Fund holds equity assets worth $25 billion and has invested in 397 stocks across the portfolio. The country's second largest fund house has made it to the largest exposure towards financials in June. It has also made some interesting buys. Jayesh Kilan is here with what HDFC Mutual Fund bought and sold last month.
So Darshan, this time was very interesting because for the entire month of June, out of their total exposure, 96% of their portfolio, they have increased their stake in. Normally I see a number of about 80-85%, but this time around that number has come in at about 96%. In terms of where they have increased and decreased stake, in terms of the increased stake, 2 sectors really stand out. One is the banking and financial space, the other one is the utility space, where they have added ICICI Bank and SBI, more than 11 crore shares added for both of those counters, followed by Power Grid and NTPC, more than 8 crore shares each that they have added in those utility counters, followed by Power Finance as well, where they have picked up or purchased additional 7.8 crore shares. In terms of where they have decreased their stake, mixed bag over here. Dish TV they have reduced by about nearly 3 crore shares, followed by Gammon Infra, Network 18, KSK Energy also. All of them they have declined by about 1 crore shares from their portfolio. Last being IDFC, 94 lakh shares that they have reduced from their portfolio. Some interesting new buys and sell-offs that we have seen in their portfolio. So NLC India, 11 lakh shares that they have purchased afresh, followed by Engineers India and Prestige Estates from the real estate space, 8.8 lakh shares that they have picked up stake. Reliance Infra and VRL Logistics, small purchases over there as well, about 1.1 to 1.8 lakh shares that they have in fact purchased. As far as the sell-offs are concerned, Hindustan Zinc tops the list. That goes out of the portfolio, 4.5 lakh shares that they held over there, followed by Chennai Petro, Capacite Infra, the interesting one, 2.5 lakh shares that they have sold off, followed by OnMobile, and Maharashtra Seamless also goes completely out of the portfolio of HDFC Mutual Fund.
Well, interesting. Thanks, Jayesh. Thanks for telling us what HDFC Mutual Fund has bought and sold in June. And during the course of the next couple of days, we'll also tell you what some of the other asset management houses are doing in trade. Just a very quick perspective. A minute left. Meghana, if I can actually come to you for stocks which are hitting new highs. One of them is RBL Bank. A quick 30-second perspective. We'll take a detailed view later. But do you track RBL Bank? What could be a trade here?
I'm so sorry, I do not track RBL Bank.
Okay, no problem. Chandan, a quick view here. RBL Bank, do you track it?
Yes, we have positive view. We have quite positive view on the same and recording from last couple of days. It has seen some consolidation, but hold above 585 may take it to 625 and even much higher levels from current levels.
Well, that could be something if it does manage to hit 625 odd, because it started this rally from 550, 551 odd over the last 10 or 12 odd days. So good going really for RBL Bank. But 18 seconds to go before the markets kickstart trade. Let's tell you what the Asian markets are doing. Well, a tick of red across. Now, I must say that the Dow futures have recovered a little bit from the lows of the day, but that is not to say that Asian markets will recover ground as well. For now, they are looking weak. And we'll start off on a weak note. I don't think these rates will last. The SGX Nifty may have indicated just about a 30-point downtick. We'll probably start off lower than that. I'll be surprised if we don't. But here's what our markets are doing right now. Holding on in the first 1 minute of the pre-open session. This will change. Let's bring up for TCS, the big boy. Came out with an excellent set of numbers and likely to react positively. How much positive is anybody's guess, but for now, about 2.5% in the first few ticks that it is clocking in on the pre-open session. Actually, should bring up the other IT names as well. Wipro and HCL Tech had a fabulous day yesterday, and let's see what they are doing in the session today. Wipro, after a 2% uptick, is up about 0.5%. HCL Technologies up about 1.5% yesterday. A minor upside in today's session as well. Infosys about 0.25%. Remember, it comes out with the numbers on Friday's session. Tech Mahindra about 0.5% as well. So large cap IT seems to be doing all the right notes today. Reliance Industries and GAIL, two stocks which had a good session in trade yesterday, should come up as well. Flattish for Reliance. GAIL, which had a big bang move yesterday, unchanged currently. Just one stock before I hand it over to Darshan. IDBI Bank is something that I want to see. Now enters the F&O ban. It's a stock firmly in focus. For now, about 3% higher. Let's wait and watch if this changes. The currency and the bond yields, if you can just quickly highlight them and see what they are doing in open. 68.84, so that stays flattish. The bond yields at 7.86 or thereabouts, 7.90. Some more weakness on the bond yields, some more strength in the bond yields and more weakness on the bond prices. Darshan.
Yeah, so mid caps are doing well and some of the high beta counters are doing well. So DB Realty is up 6% the last time I saw. There is traction in Reliance Naval as well as the Buildcon currently. GVK Power continues its good run from yesterday after achieving financial closure for the Navi Mumbai airport. Karnataka Bank is doing well. TV18 seems to be doing well in trade. IPCA Labs seems to be doing well in trade. So that's what we're seeing. On very less volume, Ramco Cements is up 9% in trade. And KC International, after declaring a lot of 1,300 crores of orders, is up almost 6% in trade. So that's on the gaining side. On the losing end, it's Reliance Power, which is showing me a downtick of 7% currently. Marksans Pharma, after all the gains over the past few weeks, has gone down by 5%. Manpasan continues to grind in lower, and Shrey Infra is down almost 3% in trade. So that's the trend that we are currently seeing in trade currently.
Yeah, well, some unnatural rates. I don't know if Kajaya Ceramics had some news, but yeah, those rates are freaky. Let's wait and watch. KC seems to be having a more believable uptick. Let's see if it has that 5% uptick or no. Somit Sarkar, though, as is the norm, joins us right now with the top brokerage calls of the morning. Somit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have a credit choose on Bharti Airtel. Now, the brokerage has maintained its neutral rating on the stock but has cut the target price to 400 from 440. Now, according to the brokerage, the competitive intensity is expected to stay high in India in the telecom market as Jio continues to be aggressive in this market. Jio's focus remains on growing market share in the stagnant and shrinking telecom market. Now, with no smaller players left in the telecom market to give away market share, new high-end postpaid plans and high-end feature phones in the coming quarters will keep the telecom market tough for the existing players according to the brokerage. Second we have is HSBC on Mahindra & Mahindra. Now the brokerage has maintained its buy rating on the stock but has raised the target price to 1020 from 950. Now the FY19 rural outlook has improved for the company as the MSP price increase have been decently high. Now this in turn has improved the outlook for the tractor and the utility vehicles of the company. The company has new launches coming in the coming quarters. However, out of these launches, the Tivoli launch appears to be the single most critical launch for the company over the next 2 to 3 years. And it is expected that the Rexton launch will add around 10% to the auto revenues of the company going forward. Lastly, it says that the valuations of Mahindra & Mahindra are undemanding at this current price levels.
Okay, so we'll watch out for all those counters in trade. Metals has seen a big sell-off in China currently because of the trade wars. Vinit, what should one do with metal stocks? Is it a big concern what these trade wars is doing, or if they come lower, it's an opportunity to accumulate?
I think you should let the metals be. But I think steel is a particularly a strong opportunity to buy on declines. So that is the way I would be playing the metal stocks. Overall metal stocks we would let it be, but any declines steel stocks should be accumulated, because in India volume growth is assured. Pricing is expected to remain firm. So given these facts, we believe that steel is an insulated space among the metals.
Steel stocks are you referring to here?
Yeah.
Vinit, which is the best steel pick that you have?
So as I've said on multiple programs of yours, we prefer SAIL over all the other stocks. I think it will have a great volume push coming through over the next couple of years. We follow that up with Tata Steel and JSW.
Okay, so SAIL seems to be the pick that Vinit has, and they also have a bullish brokerage report that they released last week on SAIL. Chandan, one of the counters which is doing well and has opened well is Indiabulls Housing. After a long time, there seems to be decent up move on the counter. Will this continue? What's your overall view on the counter?
Housing finance, it has been lackluster. When Nifty has rallied by more than 150, 200 points, the stock has got stuck and even not witnessing the follow-up buying beyond 1180 zone. So not much gung on the same. Some up move could be seen, but 1180, 1200 zone may provide a supply area because call writing is also visible in the same. Yesterday it formed a small bearish engulfing. So we'll avoid or we'll use the bounce back for again shorting opportunity near to 1180 to 1200 zone.
Okay, and Meghana, one stock which is hitting new highs in the banking space is Yes Bank. What should one do with Yes Bank? It's rallied significantly. If someone's looking to take a position, is this the right time or should they wait?
Well, I think Yes Bank has given a pretty decent breakout. The breakout is accompanying by volume, so I do not see a reason to wait. I think if it fits your risk reward, this is the right time to buy. Monthly and weekly, both the momentum is really getting into a bullish zone. And bullish candle patterns have been formed in all 3 time frames. So I think this is a good time to buy the good risk reward ratio.
Sam, it's looking very interesting, the pre-open rates. As we just get ready to settle down, you're likely to start off flat with a marginal green on the screen. That's really interesting. The rest of the Asian screen is in doldrums today. We seem to be starting off well, and you can't say this is courtesy IT. Yes, the top 5 gainers or the top 4 gainers are IT stocks, but they're very muted gains. Even for a TCS, the uptick is just about 1.3%. It's just the absence of any major losers, which is arguably leading to this performance. Very resilient. Let's see if this indeed lasts on over. The pre-open rates have settled as we speak, and certainly seems like we'll start off on a positive note. IT leading the way. Meghana, would you take a trade on Nifty, IT or TCS? TCS will likely start off at the 1900 level.
Well, very reluctantly though, because it's based on the news factor. The news is already out, and I see my risk high in this trade. If I have to initiate a trade right now, should I be holding a long one? I would have held on with my stop loss as the 20-period moving average in the daily chart. But then at this level, I'd be little reluctant considering the risk factor involved here.
What about Nifty IT at large? There too, you would only continue longs, you would not initiate a fresh long?
Yes, exactly. Not initiate a fresh long.
Okay. Vinit, Bolinjkar, one question really. Everybody's talking about how the mid-cap space has come off, and yes, it has. There has been a bit of a bounce as well. But amidst the mid-cap carnage, is there a specific name, something other than SAIL, which you believe is available at very attractive valuations?
No, I think SAIL is the best stock. So we are focusing all our energies on that single counter and going with that.
Is there a technical trade or a derivative trade out here in the metal space, Chandan? SAIL, a Tata Steel, a JSPL?
See, Tata Steel yesterday managed to hold its gain and it is at the worst of its breakout from a small triangular pattern on the daily scale, but requires a follow-up beyond 570 zone. So a follow-up beyond 570 may take it to 585 to 600 kind of level. So if I have to take a trade on the metal, I'll go for Tata Steel. Recently it has formed multiple bottoms near to 540 zone, and earlier the same used to be a resistance, so it's a classical example of resistance turning into support. But because of the global meltdown, some consolidation or dip could be seen, and that dip may provide the best opportunity. So here one can go with the option or bull call spread by paying the limited premium to get the benefit of positive to range bound bias of the stock.
Okay, we're just minutes away from the market opening, and we'll tell you all that you need to know to stay ahead in today's trade. First up, TCS beat street estimates, giving a positive start to the Nifty earnings. Brokerage gives a thumbs up to the management commentary, taking special note of its performance in the BFSI vertical. So who will take the corner office at Axis Bank? We may find out soon as the bank's board shortlists 3 candidates for the position of MD and CEO. PNB and Carlyle Group are in search of a potential buyer for their stake in PNB Housing Finance. They plan to sell a minimum of 51% stake in the company. And more news from the BFSI space. Officials indicate that LIC IDBI deal may trigger an open offer as per a Bloomberg report. More stocks in the ASM list. Ramki Infra and V-Mart join the list of companies that are placed under the ASM list. This comes after a 150% in rally in V-Mart in the last 1 year. Finally, here are some key brokerage calls for you. Deutsche Bank has raised the price target on Asian Paints to 1,600 rupees per share. And based on rural economic trends, HSBC has raised the price target on Mahindra & Mahindra to 1,020 rupees per share. Okay, 3 minutes to go for opening. And Meghana, anything apart from your recommendations that you're finding attractive since the pre-open rates have settled?
Well, I like Wipro, the way it's open and the way we had the candlestick pattern forming yesterday. I think that could be one stock. If you had to really get something for this week, I mean, a trade for a 2 to 3 day time frame, I think the momentum is just right and the volumes are just right for Wipro. And the risk is also less. I think Wipro is a good one for me today.
Okay. 3 minutes left for the markets to kickstart trade. Let's welcome in Deven Choksey as well of KRChoksey Securities. He joins us on the show. Deven, good morning and many thanks for joining in. Before we get to the market discussion at large, Deven, and we want to talk about that too, but just a quick word on what's arguably been the biggest support for the markets the last 2 or 3 sessions, and that's Reliance Industries. Any thoughts here, Deven, for somebody who wants to take a position out here, a 3, 4, 5 years perspective, not bothered about what will happen in the next 6 months? Are these good valuations?
Yes, good morning, Neeraj. And absolutely, I think the valuations are definitely in favor of the people who want to invest at this juncture. Purely from the point of view of you have a visibility of Geo platform, which is expected to produce the same amount of profits, I think, which the current core business of Reliance is producing. So which means that I think 2 years or 2.5 years down the line, you would probably have another Reliance size balance sheet coming up into the books of Reliance Industries, I think, which is going to be equal, if not more, to the current Reliance. So that visibility is on such a large scale of profit base, I think, is hard to find as far as I think the Indian markets are concerned, and probably I think you're finding that one very easily as far as I think the Geo platform is concerned. So certainly I think that's the first point I think on which we remain confident. Second thing, the entire fiber, the Geo fiber program that they are talking about, which is integrating all the networks, be it the mobile network, landline network, internet network, or even the MSO, the cable TV network. I guess I think the entire gamut of network, I think, which are being folded into one, which is Jio Fiber, and ultimately is given the customer, giving the customer, I think, a more amount of usage possibilities for different areas, which in turn would increase the ARPU for the company, and as a result of which, I think, the revenue visibility coming up from the number of customers. So according to me, I think this strategy is likely to play out very well. And on the third side, I think they have the content to back them up, the entertainment content, the e-commerce content, the education contents, and I think other areas of the contents, I think, which they have, basically healthcare contents, they have started plugging into this particular pipe model that they have created. So again, it gives you the confidence that Jio as a consumer platform could possibly be the larger than what the current Reliance is. As a result of which, I feel that if the stock like Reliance is showing the signs of producing double the profit than what it is producing currently in 2.5 to 3 years time maximum, probably I think that gives you the confidence to buy the stock with the possibility of doubling the price in at least 2 to 3 years time from now.
Okay, Deven, just hold on. We're just 30 seconds for the markets to open. Meghana, before we let you go, your top pick into market open.
Well, as of the open, looking at the prices, I would like Jindal Steel again, because the stock is at a good support, and I believe the opening would really give, the stock would give an impetus on the up move today. So Jindal Steel it is coming today.
Okay, many thanks, Meghana, for joining us. And Chandan, very quickly, 10 seconds, top pick.
Yes, already discussed about GAIL Exide interest in HDFC Limited, and I'll continue to be bullish on the same.
Okay, so that's about it.
Okay, so well, almost all three are top picks from Chandan. He says JSPL is Meghana Malkan's top pick, but this is what the markets are doing on open today. Must say, relatively a fairly decent start. We are flattish, no big cuts. That's a big thing, but the Nifty Bank is just started to now correct about 46 or 53 odd points, 0.2%. Nothing alarming as yet, but starting to correct a bit. On the whole, the first sticks are fairly flat, but I think we'll probably get some bit of direction if we do over the course of the next 5 minutes. So let's wait and watch. The mid caps and the small caps, they've had some fairly strong days the last 2 or 3, starting off on a flat note in today's session as well. Let's get the heat map up on the screen. Is there more green than red? That's the key question. No, not really. It's even Stevens, you would say that the middle row is very, very flat, less than 0.5% kind of a cut. And in fact, we don't have too many cuts coming in on the losers side at all, save for Vedanta and Hindalco, and that's courtesy what Darshan was just saying, that base metals on the LME have taken a bit of a tumble. Maybe that is playing in on Hindalco and Vedanta. Add to that, whenever there are talks about these trade war concerns coming in, somehow metals have started to take a hit, and that's reflected in the stocks as well. Hero Moto has a small downtake, ITC corrects a little bit, and Titan continues to remain under pressure. What's doing well? Well, Tech Mahindra eclipses TCS as the top gainer, or not quite really. So between the two, essentially it's IT. The top 4 gainers are all IT names, but just look at the heat map now and you will see the red enveloping the green in a meaningful way. So the market breadth certainly not looking all that great. I would argue that even for the mid caps, they will not be that great, but just the IT names, they are the ones to focus on the gaining side in today's session. TCS, HCL Tech, Infosys, all of them starting off on a positive note. The big boy, 2 percentage points higher, gaining for the market cap and becoming even larger. 2 or 3 pockets of focus before I hand it over to Darshan, based on the movements that we've seen in the last few days. Firstly, stocks which were hitting fresh highs in trade yesterday. Graphite India, HEG, Bharat Rasayan, and well, at least Graphite India and HEG start off on a flattish note, but no big moves in the session today. What about IDBI? Stock in focus, may get an open offer, speculative, but in the FNO ban as well. However, the stock is starting off about a couple of percentage points higher. It's a good start for IDBI Bank in the session today. And last but not the least, the uptrend continues in these stocks. Both Dilip Bilkon and GVK Power for the last 3 sessions have been doing rather well. Today is no exception. Darshan, what are you spotting?
PNB Housing starts well. It's up almost 3.5%. You pointed about KC International, that's doing well. Dilip Bilkon has managed to recover in trade, but apart from it, no major stocks. NIT Tech from the IT pack, I can see it's up 1%, so there's not enough traction. JBF Industries continues to bleed, it's down 5%. Quality continues to bleed, it's down another 4% in trade. And metals as a pack is not not doing well. Some of the counters I want to point out: KPIT Tech, fresh 52-week high; Tata Elxsi, fresh 52-week high, probably will be lifetime highs for both these counters. So they continue to surge in. They are at the day's high. Titagar Wagons is at a fresh 52-week low, but there's nothing much happening as far as the Nifty stocks are concerned. The HDFC banks, the Bajaj Auto, Cipla, all of them have moved to the lowest point of the day. So there's not enough traction happening on the Nifty, but mid-cap IT seems to be the way. Again, Tata Elxsi and KPIT Tech. Mindtree has moved to the highest point of the day. That's doing well. Shree Cement from the cement pack is one of the only counters in the cement pack that is doing well, and that's about it. Mastech. So I think mid-cap IT seems to be the theme. Again, that's outperforming the large cap at this point of time. Deven, any view on the mid-cap IT space? Over the past, we've seen that IT as a pack has done extremely well. TCS came out with strong set of numbers. Will this rally continue?
Well, I think within the mid-cap IT space, two companies which we have under our coverage and we like, I think them from investment point of view also, are the Tata Elxsi and the KPIT. Of course, I think both these stocks have had their own share of rally in the market, and the valuations are not easy to pick, I think, these companies immediately. Though I think we believe that I think these companies offer the visibility of at least 25% rate of growth going forward in next 3 years on an average basis. So from that perspective, if you ask me, I think we see a clear visibility in these companies. Whether I would be immediate buyer to these companies, maybe I would say that I would take the advantage of the nervous sentiments in the market. When the market dips, I think that these are the companies which probably are relatively good companies to buy into. Typically, I think we like their business model more because of, I think, the niche focus on some of the verticals. Like KPIT is automobile vertical, where they hold the patents for different products, I think, which are basically embedded into the main assembly lines, which is IT-based products, I think, which are embedded into main assembly lines. And similarly, I think for Tata Elxsi, automobile is one of the vertical. I think the other verticals are clearly the advantage that the company is enjoying currently. So all from point of view, I feel that these two companies in the mid-cap IT space are relatively better place, I think, if the market gives the opportunity at lower levels particularly.
Interesting. Deven, just stay on before we resume our full-blown conversation with you, and a bunch of questions for you. One final thought from Chandan Taparia is waiting by. Chandan, your thoughts on Open? It's a very flat start. Anything that stands out on the index for you? And one quick query on TCS individually, because that's starting off and only building strength, 2.3% up now. What does one do here?
Yes, first opening comment on the Nifty. The market witnessed some dip, but again, if it breaks 10,888, 10,875 zone, then only the pause in the positive momentum could be seen. Otherwise, again, some consolidative move with upside may open in the market. So yes, some pause or the range bound move could be seen, but bias could remain positive till it holds about 10,875, 10,888 kind of zone. Talking about the TCS, the stock has exactly taken support at its rising trend line and again headed towards the new high. We have seen the positive momentum led by its better number, and I think this momentum could extend. However, the call writing is visible but at higher side, so upside also seems to be restricted, but as of now it seems that the stock can head towards 1950 kind of zone. In IT pack, we have positive on the KPIT, Tech Mahindra and Tata Elxsi as well. KPIT has given a consolidation breakout, so here also the momentum could extend towards 300 kind of level.
Okay, many thanks, Chandan, for joining and speaking to us on Bloomberg Quint. Few other counters which have hit lifetime high. Exide has moved to the highest point of the day, and TCS is trading at record high. So that's the view that's coming in there. Deven, you've in the past you've come out with interesting mid-cap stocks like and Infibeam and all. Anything on the mid-cap end that you're recommending to clients at this point of time to hold for a slightly longer-term perspective?
So I think the correction in the market is giving the opportunity to buy back, I think, some of the good quality stocks into the portfolio. And among them would include the companies like Sterlite Technologies, which we have been holding for a long time now. And the company is now offering the opportunity to double the size from current level, from what they are at 2 million fiber kilometers to, I think, 5 million fiber kilometers, which is I think going to be a significant amount of growth that the company is talking about. And I think this is one area where I think we find this company is very well positioned. Similarly, Infibeam, as you rightly mentioned, I think this is a company where we see the larger amount of growth, given the fact that they are catering to the segment of e-commerce by providing software as a services and a solution on the transaction side. So to a greater extent, I think either look at the payment solutions, or you may look at, I think, the entire logistics solutions which are required to be given for the e-commerce business. I think Infibeam provides one. So this is one company which looks interestingly positioned, and I think they are the largest company from the point of view that I think they process the highest amount of business, I think, from the on their platform from the government of India's e-commerce, that is gem.gov.in. So that is one company which looks extremely promising. Another company which looks quite promising is Minda Corporation. They recently completed their QIP. The company is reasonably growing at a higher speed. Their amount of, I think, the savings that they would have because of the interest saving, because of the fund that they raised, that would be on a higher side. Improvement in the margin, this is going in favor. And some inorganic growth possibility going forward could possibly be the reason for buying into Minda Corp. Likewise, I think there are many companies, even the Network 18, TV 18, which are getting integrated with the Geo platform and creating a powerful pipe model with the content that they provide, is again, I think, a brilliant opportunity. So yes, I think we can talk about many companies which we have in the portfolio, and probably we like to buy further in the corrective downside that we are having currently. So this is an opportunity into quality mid-cap ideas.
Interesting. Deven, we have Anand Agarwal of Sterlite Tech joining us in moments from now. So it'll be interesting to hear out what he has to say as well. Just wondering, Deven, is this a good time to get out into mid-caps? I promise you we'll take one quick thought from you on what the mood of the market seems to be as well. Your conversation with some of your key clients, are people willing to put in fresh money to work at the current levels? Because while large caps optically look well placed, the correction in the mid-caps, which was swift and deep, also seems to have stabilized a bit.
So there are two segments of customers, I guess, I think, and in the industry as a whole, I must put it. I think those customers who went into the PMS funds, I think, who have been basically momentum driven and who took a high exposure into mid-cap, and they ultimately ended up losing their capital in this particular fall. They are the ones, I think, who are badly affected, and I think their fund managers have already sold out their portfolio. So I think that is an area where your first part of the question may be related to that. I think whether the investors are confident. I think in the industry, some investors have been badly affected because of this particular approach of some of the PMS fund managers. However, fortunately, we are having the quality mid-cap portfolios, and along with the large caps, wherein we hold a good balance between large cap and the mid-cap in our PMS. The considerable amount of, I think, the protection which we provide through this particular strategy, and as a result of which we have found that in this fall, our clients have ended up putting in more money into the market, and they've bought in further. So I guess, I think it's a quality which is basically segregating the segment of clients which are there in the markets, and that's where I think we are relatively favorably placed in this entire thing. I would think that the opportunities available in the large caps and the mid caps equally are quite some, and probably one will have to selectively buy into the portfolio, particularly when I think the market gives an opportunity due to the price corrections for any reason and the fundamentals staying intact. I think this is a time to buy into good quality stocks. We maintain that India economy is progressing phenomenally well, and some of the corporates are actually, I think, showing a typical character of growing their companies faster than what they have done in the past. With a measured amount of financial discipline. So I think we find ourselves very comfortable with quality companies and quality promoters, having them in the portfolio, and particularly taking the opportunity in this fall to accumulate further into the portfolios.
Okay, and as we speak, the Nifty probably will break into the green. A lot of stocks have started contributing. Infosys has moved to the lowest point of the day, but counters like Bajaj Finance has moved to the highest point of the day. Hindustan Unilever has moved to the highest point of the day. Z has moved to the highest point of the day, and Asian Paints is moved to the highest point of the day. Probably Asian Paints will again come into record highs if the move continues. So that's what's happening. But two stocks which I want to point out and are doing extremely well. Pull up the intraday chart of Tata Elxsi. It's up almost 2%, moved to the highest point of the day. And KPIT Tech, again, the rally continues in all these counters. So Neeraj, strong traction seen on all these counters, especially the mid-cap IT.
And I'll add one name to it, Darshan, IDBI. That's up another 9% today after the 9% uptick in trade yesterday. So fairly interesting move out here too. Deven, final thoughts really. You already gave a quick thought on mid-cap IT. I don't know if you track Tata Elxsi individually. I remember you used to. I don't know if you guys still have coverage there. But I want a specific question on IDBI Bank. You know, as a tactical opportunity, what would you preempt here? Would you preempt the open offer coming in? Because I think the market is working with that assumption, which is what explains this 18% or 20% up move in the last 2 hours of trade really for IDBI Bank.
Well, I don't know, Neeraj. I think at this point of time, I think whether the open offer could be the option, I think, which this particular bank would have. And I really do not know, I think, whether there will be a possibility of concession from SEBI, particularly for, I think, those kind of stress assets where the buyer is available from the government side or government organization side. So from that point of view, I'm really not too sure whether I think there is going to be an open offer on the card. Of course, the market is counting on this possibility, and as you rightly said, as a result of which I think the stock price has moved up. What all said and done, I would think that LIC buying into IDBI, it would be an interesting play, I think, that one would probably look at. LIC is always, I think, a big opportunity from the point of view that I think this company has got a sizable amount of insurance business that they have created. And on the other side, I think if they end up supporting the IDBI Bank and create a turnaround story from it, I think it would be a wonderful thing to watch about, maybe a right example to set about as well. Let's wait and see on that front. As of now, I think we don't have any specific view on this particular subject, so would refrain from putting any recommendation for the time being.
Okay, no comment on Tata Elxsi either, Deven. I remember you used to look at it very closely earlier.
Sorry, I missed out that. I think Tata Elxsi we continue to look at and we continue to hold in our portfolio. We have been liking this company from long now, and I think we believe that the kind of model that they have created is, I think, a phenomenal. On one side, they have autonomous car platform which they are developing. On the other side, I think they are catering to the pre-production, post-production in the entertainment segment, I think, which is, I think, a good platform that they already created. The bigger opportunity is also available in the area of what you call the modernization of airports and modernization of railway stations plus other public spaces and infrastructure, where this company ends up providing the entire navigation, what you call plans and the architectural plans for the navigational purpose, which ultimately allows the entire facility to become more powerful and efficient from the logistic point of view. And this business is equally growing and growing very well. What I like about this company is that they are basically growing with a measured level of growth. Though they have an opportunity, big time opportunity on one side, I think they take up the projects as much as they can handle. And that's where I think 25% kind of a CAGR growth in this business is distinctly seen visible. If the valuations are relatively steep at this point of time, largely also due to the fact that I think the company has not been diluting its capital, and that's the reason for which I think the investors have been staying with this company for long. So from fundamental perspective, growth perspective, business perspective, everywhere I think we find this company is very well positioned, and that's where we like this company from investment. In fact, I think it's one of the preferred choice that we have in our portfolio from the mid-cap IT space that we continue to hold on.
Okay, Deven, we leave it at that. Always a pleasure having you on the channel. Thank you so much for joining us on Bloomberg Quint today. We'll take a break on this side, but on the other side of the break, Anand Agarwal of Sterlite Technologies will join to talk about the Italian acquisition, the data boom, and the consequent demand for fiber networks. You can't miss it. Do stay tuned for that.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
Harit, there's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Well, back with Indian Open right here on Bloomberg Quint. Sterlite Technologies has been a stock on a roll, maybe with reason. Got hammered in the carnage in the mid-cap space, but since then has bounced back very, very smartly. They've also done an acquisition. The important thing to note, or important thing to ask the management is whether this is a part of a string of pearls strategy that they will adopt on a global level, or this in itself gives them enough meat into the European region where their exports are increasing by the hour. To talk about that and more, Anand Agarwal of Sterlite Tech joins me on the show. Good having you, Anand. Thanks so much for taking the time out. Can you talk a bit about this acquisition? Is this a large acquisition in itself, or is it a part of, as I was saying, a string of pearls strategy that you may adopt to enhance your role on the global platform?
Sure, Neeraj. Thanks for having me here. So essentially, this acquisition is part of our strategic roadmap. If we see our overall vertical integration approach, the core of the technology is what we make in glass, which is preform, which largely we do in India, which we're expanding to 50 million kilometers. So that's the glass and the fiber part. With the drawing of the glass, we do it mostly in India and partly in China as well. And the cabling, which is the downstream part, which needs to be closer to the customer, is where we are expanding points of presence at various locations globally. So now we have it in India, we have it in Brazil, and with this acquisition, now we have it in Europe as well. So it's essentially a milestone in our overall roadmap. The subsequent points of presence that we do globally at any points, we always see the perspective of doing a greenfield, making or buying. So all those perspectives will still apply. But for now, this is a great acquisition. It provides a good platform. Europe is already almost 25-27% of our sales. And Metallurgica fits in right in there with great customer access, with good manufacturing capabilities, and a great degree of capacity, all merged with a very, very good talent pool. Yeah. So we are very pleased with this one, and we'll see as we go along.
Yeah, I read that even Metallurgica is not even operating currently at probably optimum capacity or full capacity utilization. Let me put it that way. Europe has this gigabit society goal as well. Does this in meaningful way give you the ammo to up the game via Metallurgica over the course of the next couple of years in the European front, Anand?
Absolutely, absolutely. So we are already strongly present in Europe from our perspective, but if we see it in an overall European context, we are still small. We are strong in a couple of countries. We're strong in UK. We're strong in France. But with Metallurgica, now we have the required strength, both in market access, in capacity, to look at Southern Europe, to look at Central Europe, to look at Nordic countries. It gives us a great platform to go elsewhere, which we had been lacking due to logistical reasons, due to access to the markets. Now it provides us this great access.
Great. So, and I believe you're present, as you said, in Brazil, you're present in China. You also have some presence in India, Brazil, now the Italian firm, and then China. Would you actively be looking at more such acquisitions? The reason also I ask is that, if I'm not wrong, I was reading an analyst note which said that via internal accruals and access to low-cost debt, you'll be able to fund this very, very easily. Does this also give you, one, the confidence, two, the hunger to probably do a couple of more such things? Because you are, arguably, as you've said in the past, in a very high growth space, not just in India, but on the global level.
Sure. So we'll look at it. Everything we'll look at it from a strategic perspective. If we need to do something from a capability perspective or market access, we always look at whether we can buy something or we can do it organically. So per se, we really don't have a M&A target list, but there is a clarity on a strategic roadmap. We will do 50 million fiber, we'll do 25 million cables, we'll do it in select geographies globally, and we'll always review if there are good companies available who create value in being together. We'll definitely look at that. But I don't have a list per se of geographies and name of companies to go and acquire them right now. So.
Okay, maybe one more reason why I asked you this question, Anand, was that while you are present across the value chain, be it preform or fiber or cabling, the world, as I learned from a couple of presentations that I heard recently, the world is facing a shortage of preform capacity. Now, would you look to enhance capacity, one, brownfield or organically, and two, maybe inorganically via acquisitions like these? That was probably one more reason why I asked you this question.
Sure. So we are already doing it organically right now. We are going from 30 million to 50 million. 40 million will come by end of this year, so end of December 18, and by June 19 another 10 million will get added. So within a year or so, from a 30 million capacity sitting in June, July 18, next year around this time we'll have a capacity of 50 million kilometers. That this extra 20 million provides us good enough firepower to get more access, to get more market share globally. Beyond that, if we need to do, again, we'll review the decision. Does it make sense to buy or to make? And at any point, currently, considering the fact that the supply-demand dynamics are so strong in favor of demand, anything that we even look at buying would be commercially not viable.
Okay. Actually, if I can throw in one more question out there, from what I also read, the Verizons and the Vodafones are pre-booking capacities in a meaningful way, unless I'm very wrong. And somebody mentioned that the spot prices of fiber way higher than the long-term contracts. Do you envisage pricing moving up on the long-term contracts as well? And does all of this, coupled with the enhanced capacities that Sterlite Tech across the platform will have over the course of the next couple of years, only mean that both the volume and the pricing on fiber would dramatically improve for you as a company too over the course of the next 24 months?
On the demand side, yes, and we are already seeing that on the demand side. In the last 18 months or so, our order book on the product side used to be 700-800 crores, which has now closer to almost 4,000 crores or so, which is other than services and software. So we have seen a 4-5x increase in order book in the last 18 months for us. And we are booking orders we are largely booked for the current year. We are reasonably booked for calendar 19, and we have orders going into 20 and 21 as well. So on the demand side, clearly there is demand and there are multi-year engagements. What you talked about, the spot prices, we have consciously decided since many years not to play in the spot market at all. So while we hear of such prices, we have no direct experience of those high prices. We have to also see the dynamics of the overall industry. See, on the industry, our immediate customers, which are the telecom providers, they continue to be having a pressure in terms of revenue per gigabyte. And so we can be opportunistic of trying to take advantage of the demand supply situation, but we have decided that we will not be opportunistic. We would rather book our quantities for longer term than trying to increase prices in the shorter term. So for us, pricing has been reasonably stable, but the order book forecast and the order book longevity is increasing, and that's a decision that we have taken.
Okay, interesting. Maybe a couple of questions on the product side before I move on to the services and the software side. Anand, a statistic that somebody gave me was that China deployed, I believe, about 285 million kilometers last year. India is probably a fraction of that all through the life cycle and definitely in the year gone by as well. Is the domestic business for you as a company, and that will only come if India as a nation really expands meaningfully or spends meaningfully on this capacity as well. Are we seeing any signs of that at all, or would you believe that the large portion of growth that will come in for your products business would come in from the global arena?
No, we are very, very bullish on India, and we are certainly seeing signs of it right now. So in India, with the incumbent telecom providers now actively looking at connecting all their towers with fiber for their 4G. The newer ones like Reliance Jio moving from 4G to focusing on fiber to the home in lots of cities. The BharatNet rollout moving to the next phase, the smart city moving. So in India currently there is a great degree of focus, a great degree of intent converting into orders, and it's no longer the question of whether India needs fiber or will it deploy fiber. Now the constraint is moving to an extent supply and execution. The degree of execution that the country would need to do over the next 3-4 years is it has not done in the last 15 years combined. So the focus is now going to move towards delivery and execution, and we as a company are also focusing on seeing how we can solve the execution bit of the problem through our services business.
Am I to presume that the Indian pie of the business will necessarily, because the nation needs it, move up for you as a company quite dramatically? And would it only happen at the behest of a player like Jio doing this, or would the other players, or are the other players also actively looking to do the same thing, the connectivity to home that you mentioned about?
Clearly, I would almost say it's happening at the behest of the consumer. The consumers now want to consume 6 to 7 gigabytes of data every month. To deliver that to 1 billion consumers, you would need a completely revamped network. So Jio is taking a lead in delivering that in all the cities. For Airtel and Voda Idea, they are following it up also because they have a older network and they need to convert it into all IP. So they are focused towards making that conversion happening. BharatNet is moving forward with its connectivity to the rural part of the country. So I see a multifaceted approach which is actually required for a country like India to deliver this 5 to 6 gigs per month to the billion people in the country.
Interesting. Some thoughts on the non-product side as well. I know you can't talk too many numbers, you would be in your silent period, so won't press for that. But the last time that we spoke to you, which was in December, in an extended conversation, you had mentioned that you're not only looking at designing the new networks, building them, monetizing them and managing them, but also integrating it with fiber, the services vertical and the software vertical. So how is the non-products side of the business shaping up now? 6-7 months ago, you were talking about this taking new shape and form and a much higher scale. How is that played out over the last 6 months, and has the scale and the capacity only expanded?
Sure. It's services is the domain which is so for us the glue between what we do on the product side and what we do on the software side. And the new networks which are coming, it's called the networks of the future, is actually that a very simple evolving network where there is a very high quantity of fiber and it's all governed by open source software and open source hardware. So our services business is focused on that. And the scalar growth that we spoke about 6-7 months ago is already reflected in this advanced purchase order that we have from the Indian Navy, which is worth almost 3,500 crores of business, which is to connect 43 naval bases with a state-of-the-art communication network. And it's a vertical network with fiber at the very base level and then enterprise solutions at the very apex levels. And it's an end-to-end communication network, which us having that capabilities of fiber, system integration and software, we are very, very uniquely positioned to deliver to such a requirement. And services is that glue which provides us that capability to deliver everything end to end.
Interesting. So can you, I don't want specific numbers of what you will clock in every quarter, Anand, but can you give us some ideas of what the natures of these businesses would be? Like, for example, let me start off with smart cities. Last time that we spoke, you gave us an indication of what a Jaipur or a Gandhinagar or a Kakinada could be. There could be an initial layer, and then there are multiple layers of networks that you build in, and then the revenue capability for you as a company is in maintaining that project for next 5 to 7 years, but also monetizing the layers that you're putting in. And once you have the foot in the city, the number of revenue shoots can only expand. Can you give us some idea of the numbers that an average sized smart city project can draw in for a company like you?
Smart city is projects of multiple different sizes. The numbers that I spoke to you last time in India, the sizes are about, today for each phase, it's about 50 to 100 crores. Some cities are now moving towards 400,000-500,000 crores. What we see globally, a smart city project can be a project worth almost $300 million. So smart city today, since it has such a wide degree of definition and different people are interpreting it in a different manner, it could be a project from 50 crores to 2,000 crores. But nevertheless, for us, the focus essentially is in the revenue starts happening at 3 different levels. The initial part is when you roll out the network itself, when you are building the network. So that's a capex which the city spends, and we design the network, we roll it out, so that's one part of the capex. The second part of the capex is the second part of revenue stream essentially is towards the operation and maintenance of the network. Which is typically 5 to 7% of the capex in an annual basis, and that becomes an annuity. And the third part, which is today completely unexplored, would be the monetization of the network in terms of revenue sharing. Today, we are largely, for the networks that we are building in our services business, are focused today in terms of timelines. It's all the first part of the revenue, which is just building the network. We are building that network for Indian Army in Kashmir. We are building some of the smart cities. We have bid for some networks to be built to connect the villages through BharatNet. So today it's building the network. As the build part of the revenue augments and it becomes a large number over the next 3-4 years, even 5 to 7% of that, the O&M part would become an annuity for the next 5 to 10 years. And the monetization part, which is not there in all the opportunities, but in a few of them, is an interesting aspect, which it almost becomes a kicker for us to look at it. But I would almost say it's a cherry on the top, and we are not even considering it. It's a interesting thing to think about and structure yourself to be ready for that whenever that kicks in. But the clear focus for us is today is in just the infrastructure build part of it.
Okay, and please correct me if I'm wrong, Anand, but your infrastructure, all the build part is what your current order book is, which is that about products, non-products combine about 5,200 crores, which we have, and added to that another 3,500 crores of the Navy order, which also I presume is a build the infrastructure part.
3,500 crores contains about 2,600 crores which is build and 900 crores which is operate and maintain for 10 years.
Okay. And the Navy 3,500 crores is entirely build as of now.
That's what I was saying. For Navy, 2,600 out of 3,500 is build and 900 is yeah.
Okay. And
but you're right in terms of the current order book that we have. 5,200 crores is largely either product supply or the build part only.
Okay, and the size of the Navy order, which is arguably larger than what your current revenue book would be, shows the scale of orders that corporations or municipalities or governments or companies would be willing to give you. Maybe not the magnitude. I'm not questioning the magnitude, or I'm not asking about the magnitude or the exact size, but would orders of such large magnitude, 3,500 crores, could be 2,500 crores, could be 2,000 crores, whatever the number is, are many more such orders possible for a company which is arguably the leader in this optic fiber and this whole data digital space in India?
It will depend upon what the various entities are looking at building. Networks can be built in a macro manner. It can be built in layers and stages as well. Navy is a macro network built out, 43 sites all to be built out in a period of the next 12 to 18 months. And similarly, and it is like a pan-India sort of a rollout which is going to happen. The state opportunities will be lesser in size, would range from say 500 to 1,500 crores. The city opportunities will be slightly even lesser in size, could be between 50 to 500 crores. So it will depend both on the scale of the geography as well as the scale of the complexity in the network. And we are looking at in a very focused manner the ones where we can play a role in designing, where we can create value in terms of rollout. So different opportunities, I would say, would range from 100 crores to say 2,500 crores. That will be the scale, based essentially both, as I said, geographic as well as complexity.
Okay, I'm totally short of time, Anand, so I have one last question, or maybe two questions rolled into one as the final piece of this conversation. One, would you continue aggressively on the non-product side? The reason I ask this because, unless I'm very wrong, the margins on the non-product side would be lower than the margins on the product side. So one small view there. And two, this whole opportunity from 4G to 5G, which a lot of people are touting to be way bigger than what the opportunity for 3G to 4G was, I'm sure of it. Is it still, in India at least, a few quarters away?
Sure. The 4G to 5G opportunity, as you rightly said, is much larger, where the points of presence, all the towers, micro towers, small cells are moving closer and closer to the consumer, and everything is connected by fiber. So it's a large opportunity, and you're right. Even globally, this opportunity is a few quarters away. Globally, also right now, only POCs and trials are happening right now. So in a macro manner, globally, 5G will hit only in 2020, where it starts becoming significantly meaningful in the overall CapEx cycle. In terms of services and software, clearly product is an area where we are fully focusing on what we need to do and strategizing it. But our relevance, our key proximity to the customer starts coming in as we start becoming closer in terms of them towards designing their networks, towards building their networks. So we will be working at for both products as well as services and software in a holistic manner, in being able to design and create that opportunity for the customers. And we will grow both businesses simultaneously, while not depending on one at the cost of the other. So that's a focus for us as we move forward. Fully capitalize on the customer engagements that we have, fully capitalize on the strength that we have on products, and go full log on there. At the same time, increase your relevance, increase the design capability, increase the degree of presence with the customer, through services and software, which is becoming more and more and more relevant as the networks are completely evolving, completely becoming software defined, completely becoming virtualized.
Great. Anand Agarwal, many thanks for joining in today and giving us your thoughts. Really appreciate. Look forward to talking to you post your quarterly numbers.
Thank you, Neeraj.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ.